Today I have a very special video where I discuss the best candlestick signals. I will show you how to analyze price action the right way. I will show you how to get into trades, what are the best entries, how do you place stops, how do you choose your targets on your charts, how do we do a proper top-down multi-time frame analysis, and everything else you need to know, and only price action 100% and nothing else in this video. So let's get into it and let's get started. And many traders may say or believe that price action and candlesticks are too basic, too simple, and that they are not good enough. However, in this video I will show you really how to use candlesticks the right way. There are lots of important tips that we'll use. First of all, the bias. Where does it happen in the markets? Is it fit into the trending direction? Does it fit into the trading context? And even more importantly, how do we build confluence? So confluence means that we are combining more than just a single candlestick to form very sophisticated trading ideas. And as you will see, this will completely transform the way you look and understand price action. So here's the first example. We are starting with a regular Pinbar continuation. So you can see here's the Pinbar, the market is in a downtrend, and the characteristics of the Pinbar is obviously that we have a long candlestick wick. Some people may refer to it as a candlestick shadow or a tail, whatever it is. You can see we have the wick component, and a Pinbar has a very relatively small candlestick body. And those are the characteristics. The bias and the idea of the Pinbar is that the general idea is that the market will go away from such a wick. And this is the idea behind the Pinbar. So what is the context that we are looking at here? Because obviously a Pinbar is interesting, but it's not strong enough. First of all, when we look here at this chart context, we can see that the market is in an overall downtrend. The market is making lower highs, very interesting. And very often in a downtrend, you will see this break and retest formation and a break and retest process. So previous support, here you can see the market paid attention to it twice. First, second support, broke below it and then is coming into it from underneath. Now people think that support may be turning into resistance, and since we're in a downtrend, this may offer a great trading opportunity to go with the trend, and the Pinbar is then our signal that we are using here to build our trading idea. We can now drop to a lower time frame, whereas previously we are on the 4-hour. Now we are looking at the same Pinbar but on the 30-minute time frame. What do we see here? We see that the market is in a very strong uptrend. We can draw a trend line here, and we also see that the market is building here a support level. So you can very nicely see that the market is trading here above the support level. This is a very important piece of information that we're going to use later on, because if we want to time a short trade away from the Pinbar, we are going to a lower time frame, and here we need to pinpoint or sniper our entry. So we want to make sure that we find a great trading idea on the lower time frame. One of the ideas would be a breakout, a break and retest, and for breakout trading, we always need to identify a level that the market needs to break out through or to break out from. So here we have identified our support level. Now you can see we have a very high momentum bar. High momentum breakout candles are preferred because obviously, what do they show? They show that there's a lot of interest here behind this move. The buyers and the seller dynamic has really shifted, whereas previously you can see we have mostly only green candles. Now suddenly we have a series of 3 large red candles, especially the last one, very, very large. You can look left and you can see we've actually never seen such a large red candle here during all of this trading action. So this is a very important piece to the puzzle, and this is how we build confluence. We have the Pinbar, we have the higher time frame trend idea, the direction, we have the support resistance breakdown, we have our lower time frame trend line that is broken, we have the lower time frame support level that is broken, and we have the high momentum candlestick, which is another level of confluence. So we have multiple confluence factors that we can stack on top of each other. And you can see afterwards the market really collapsed. One of the trade ideas would be, for example, to target previous lows. You could use other support and resistance levels, as I will show you in later examples in this video. But if you want to keep it simple, trading into previous highs and lows, support and resistance levels, that's usually where a lot of traders start with such an approach. The next setup I want to look at is the hanging man, and the hanging man is pretty much the opposite of a Pinbar. And you can see the characteristics of a hanging man are also just like a Pinbar is a small body and a relatively long wick or shadow. However, in this context, the wick is pointing into the opposite direction. However, the bias idea is still the same. We are looking here into a bearish move and we want to trade into the direction of the wick. Why is that interesting? Because of the context where this is happening. The price is in an overall long, mature uptrend. And in a mature uptrend, especially when you see that the price and the trend has problems continuing the trend direction here with lower highs. And also if you put in, for example, an RSI or any other momentum indicator, you will see that here we have a divergence at the top forming. So there are multiple signals why it is maybe time to look for trends and trade ideas into the new trend direction and not join the uptrend, because the uptrend has been already going on for a long time and it looks pretty weak when we look deep inside the price action. And what does the wick actually tell us from the hanging man? It could tell us that there was a lot of selling interest here within this candlestick and the market was actually able to push lower quite a bit. However, of course, the market wasn't fully able to close here at the lows. However, this still indicates that there was quite a lot of selling interest here. And the market, just imagine how this candle would have looked like intra-candle when the price was all the way down here. Would have looked like a very strong bearish signal. So a hanging man is an important and interesting pattern. However, on its own, it's not enough because this could also go in the opposite direction. A hanging man and a candlestick in general is always just the first piece to the puzzle, and then we can look deeper into the price action. For example, we could now wait another candle and see, is the price action actually able to break out of the pattern that we drew? So here we have identified the wedge where we have the previous trend line here at the lows. We also can identify this price point here as our last swing low. And if you want to trade short and if you're betting that the market is starting a new downtrend, what do you want to see? You want to see that the market is making lower lows and lower highs. We already have the lower highs here at the top. Now on the breakout through the last swing low, we also have the confirmation that we are making lower lows. So now you can see we have a lot of confluence factors already that are pointing towards the downside. And you can see the market really collapsed. If you would have zoomed in here on the lower time frame, this is the 4 hour, so you may have been able to go to the 1 hour, maybe the 30-minute time frame and look at how the market traded back here into this level. This is what we would call a break and retest pattern. I've included a few very interesting break and retest trade ideas later in this video, so make sure to stick around because they can be very, very profitable and they are very common in the markets. So there are multiple ways how we can get into this. Breakout, pullbacks, retests, a few different options, and I've prepared quite a bit for you later on. Again, a target idea, a very simple beginner target idea would be to look left and just understand and analyze and ask yourself, where's the last important support and resistance area? And you can clearly see that here has been a very important resistance area, and that would be an idea to take a profit order here because the market is likely to bounce. Not always will the market actually bounce, but very, very often you will see some reaction here and it makes for good target levels. In this example, we have a double hanging man. You can see we have two candlesticks where we have a relatively small body and both candlesticks have relatively long candlestick wicks or shadows and both are pointing upwards. So that looks quite interesting. The idea in general would be that we are looking for long opportunities into the direction of the candlestick wick. And let's look at what the context here actually is. So when we look at this chart left, you can see the market was in an overall downtrend. And here was the last swing low. This was the lowest point of this downtrending market. And in a downtrend, what do you want to see? You want to see that the market is making lower lows and lower highs. However, the market is not able to make lower lows here. And if you see that, especially in a trend that has been going on for quite a while, if you see weakness can be in this way that the market is failing to make a lower low, then it's time to look for signals into the opposite direction. It is not the signal that you will automatically go long here, but it's the starting point of, okay, now I need to start shifting my bias idea. I need to start looking for trades into the opposite direction. And the hanging man is a first starting point here. Again, a hanging man or even two hanging mans are not enough. You can see afterwards we have a nice reversal candle. So now we already have three confluence factors or even more. We have a long mature downtrend that is failing to move lower. We have two hanging mans And we have our long momentum reversal candle. So already we have 3 great things and confluence factors that are pointing towards an upside directional change. And now we can go to a lower time frame. This was the daily. Now we are at the same position on the 4 hour. What can we see here? We can see that the market here is making this double bottom. We can even see when we zoom in here on the microstructure, we are making higher lows. Very important. At this point, we haven't made a higher high yet. Very important, because here's the last high, but we are making higher lows. Very, very important. And then in this case, what you would do is identify a breakout level. It's generally not recommended to trade inside ranges, especially if you are betting on new trends to emerge. It's always a good idea to identify where is the trend structure really shifting. And generally, this is where highs and lows are broken. And many traders run into issues because obviously waiting for a trade and being patient is quite hard. But it really will help your trade selection if you can identify those breakout levels and then wait for the market to actually break out. So here you can see the market is crawling over the level. We have a strong bullish candle, and then here we have this inside pin bar as well. You can see a few candles later, the market is doing this retest signal, and the market, whereas previously this level has worked as a resistance, now the market is coming into it from above. And the market and the price action actually wasn't able to break below this level, which is a very, very strong signal because it confirms that the previous high is now a low. And this is exactly what you want to see in a potential uptrend. And this is where retest traders would start looking for opportunities. It's not recommended when the market is reacting or reaching the level that you have a pending order there at, or that you go into the trade here directly or automatically. It is always recommended to actually wait for a candle to fully close and to move away from the level. This is how you can actually see that there is momentum behind the level and that the level is actually holding. Otherwise, you don't know, and it's a very, very gambling trading idea if you blindly trade those levels. And you can see the market took a while, it came back into the level once again, struggled here a little bit around the previous lows, but eventually it moved into the previous highs. So here you could, for example, start implementing some stop loss trailing ideas. One way of stop loss trailing would be always to identify where's the last low and then keep trailing the stop loss along the way. And this is a way of how you may capture trending moves very effectively. But obviously there are many stop loss approaches, and maybe it's time that we do one of those in a different video. So if you're interested in stop loss videos, let me know in the comments below and I will consider that. The next signal I want to talk about is a Fakie and momentum candle. So Fakie stands generally for a signal where the market has broken into a new low and was immediately rejected. So and the idea is that we're looking at a bullish signal here. So let's try to actually see the Fakie. And when we zoom in, you can see that during this downtrend, here was the last swing low. The market kept making lower lows and lower highs all the way. And we identify the last swing low, and especially in a mature trend, when the trend has already made several trend waves into the trend direction, and the trend is, so to speak, maturing because it has been going on for a while, it makes sense to look for signals that the trend is losing strength. And the Fakie, in this case here, is such a signal. You can see here was the last low. The market briefly penetrated the low just a tiny bit and immediately jumped higher. So this was a huge turnaround. Again, we look left and we have never seen such a huge bullish candle here during all of this downtrend. So great confluence here and a great piece of information. So now let's try to look at context. Again, we want to combine and we want to look for previous resistance, which was here. Here we have the previous support. And this is now actually the time where the market is breaking into a new higher high. Whereas previously the market always made lower highs, here we have a higher high. And we not only have a higher high, but we have a lot of context here with the trading idea. We have the Fakie, we have the huge momentum bar, we have the trend exhaustion. For example, you could put a RSI on this chart, and then you will get a divergence here as well, either from here to here. And then here we have a double bottom as well. And you can see if you're not comfortable trading those huge breakouts, we have a retest pattern. So the market tried to break lower here twice, but was rejected. So you can see we have two candlesticks where the wicks poked through the highs, tried to close below this resistance level now, and every time it was rejected and moved higher and closed above the level. So very, very important signal. And then you have the continuation signal. This is where retest traders, continuation traders would look for opportunities into the bullish trading idea, because now we have even more confluence and we see that the level has been holding. The rejection was successful, the bearish attempt was not successful, and we are here potentially starting an uptrend. When we look left and when we want to identify targets, it always pays off to just understand and ask yourself, where are key market structures? Here, for example, this blue area is a supply and demand area, which led to this huge drop. Here's an important swing point that led the market from going higher to lower. Always important to mark those swing points and those trend turning points. Here we have a breakout area which started this huge downtrend, also an area where something significant has happened, very important to mark, and then here obviously as well the high point of this trending market. And you can see each time the market moved into the levels that we have identified, there was kind of a struggle. Here you can see the market spent a long time underneath the supply and demand area. Here the market showed a rejection and reaction as well. It moved into it, broke higher, broke into the previous breakout level, came back into it to retest it, and then eventually moved here into this huge candle that marked this origin of the downtrend. So very, very nice ideas on how to find targets. And in general, what is very important, people always want to have bigger winning trades because obviously you want to swing for the fences and you want to hit the home run. But the longer or the wider away your target is, the harder it is for price to reach it, because it has to push through a lot of other hurdles, and then your holding time will also go up. And staying in winning trades, if you have been trading for a while, you will know staying in winning trades and riding through those ups and downs is very difficult. So what I always recommend to traders is, in the beginning, to get a little bit more confidence under your belt, is that choose your targets a little bit more conservative. Look at the first reaction, market structure level, and then maybe consider that for your targets. The next is the inside bar, and the inside bar in general is firstly considered an indecision bar because it just generally shows that the market is slowing down. And what is the context here? The context is inside, as the name suggests, means that the current candle is trading inside the previous one. So it's a smaller candle that fits into the complete range of this candle that was given here previously. So we mark the highs of the previous candle, and then you can see this candle here, the red one, fits completely into the previous candle. So that's why we have an inside candle. We can then go to the lower time frame and we can identify the highs and the lows here. And the inside candle first is not strong enough of a signal because it could go either way. And here again, context is king. Do you want to look for an uptrending move? Do you want to look for a buying opportunity? Probably not so much, because the market has previously shown that here was a huge rejection here. At this level you can see 3 pretty strong rejection wicks, and every time the market moved lower. So it looks more like the market is actually moving away from this level very, very strongly. So this would already give you more of a bias towards a short continuation. And for that we would wait for the market to break through the lows. So here, a few candles later on the lower time frame, you can see the market is back in the lows. And again, when you are trading a continuation strategy or a breakout approach, one of the most important things is that you wait for a confirmed breakout. The biggest problems that traders have and always come to me and ask, how do you avoid fake outs? How do you avoid trading into fake breakouts? And obviously you won't be able to avoid false breakouts 100%, but you can already drastically improve your chances by just making sure that you wait for the candle to fully close outside of the range. Many traders make the mistake that as soon as they see the price is sticking out below the lows, they will jump on this trade, and fake outs are very, very common at those key levels. So that is a great tip that you need to make sure you adhere to. You can see afterwards the candle actually did break out, but is this such a great candle to trade into? This is a very strong candle, and what you will often see is that those huge candles will actually often, not always, but often be followed by a reversal or at least a consolidation. And also, what is not ideal about this is that this candle would force you to probably have a very wide stop loss. Generally, you would like to place your stop loss inside of the range because it's very likely that the market is retesting such an area. So if you place your stop loss somewhere in here, you would have a huge stop loss. So sometimes when the breakout is just too strong, it is not recommended to trade it. So you have two choices. First of all, you could let this trade pass without you, or you wait for the market to maybe give you a retest. Sometimes the market will run away, that's totally fine then, but sometimes the market will actually come back to the level. And here you can see afterwards the market came back into the level. Here we have previous support turning into resistance. And what signal do you see here? We see an engulfing candle. The red candle is completely engulfing and outside of the range of the previous green candle. So technically, the green candle previously would be considered an inside candle of the red candle. And this is a very strong momentum signal, as we will see later. This is a very important candlestick signal because it shows you that there is a lot of momentum going on, and now we have even more confluence. So we are trading, if we remember in the beginning, we're trading away from this huge spike into a potential new downtrend. We have patiently waited for the market to break out of it, and now we have a retest with an engulfing candle. And you can see we are on a 2-hour chart, which is the lower time frame. You can see that we are making lower highs. So we are now technically in a lower time frame downtrend. So we are trading with the downtrend and with the trend direction. So you can see we are starting with a single inside candle on the higher time frame, and then once we are ready for our trade execution, now we have multiple confluence factors that really put a story behind this trading idea. And this is how you actually find and improve your trading quality, because that is how your trades are multi-dimensional. They are not only based on a single candlestick signal, but they have a full story behind it, and they are backed up by many different factors and criteria. So no price action candlestick video would be complete without a pin bar. Pin bars are great, but again, pin bars on themselves are not strong enough. But let me show you how to really put this into perspective. So the pin bar is made up of a candlestick with a long candlestick wick or shadow and a relatively small body. And the body usually should be at the lower end of the candlestick in case of you're looking for a bearish trend direction. So the candlestick is sticking out to the upside and the body is located at the lower end of the candlestick. And this is the idea of the pin bar. And generally what you are looking for is trades away from the candlestick wick. So trades into the downside now. Now we are looking for context. We have a trend line here that very nicely describes this trend. So for now, the market keeps making higher highs and higher lows. Well, not so fast. We're not making higher lows, higher highs actually. We are making higher lows, yes, but we're not making higher highs because here was the ultimate high. And this high of the pin bar looks like it's lower. Of course, the market could just now keep going higher, but we are waiting patiently and we're going to see and wait what is the market going to do. The pin bar is just the first piece to the puzzle. Okay, now we have our second piece because now we can see the market seems to be making a lower high. This is what I sometimes refer to as a 3-bar reversal candle. I think it's also called morning star or evening star. And it is made up of 3 candles, a strong bullish candle, a pin bar or sometimes a doji, and a strong bearish candle. And the idea is that the market is really showing you this nice gradual turnaround from the upside and the higher trend to now potentially looking at a bearish trade idea. And now we are building more confluence. A few candles later, we have now fully confirmed this is a lower high. And for the first time in all of this uptrend, we are now making a lower low. We are breaking through this very important support level, which has held 1, 2, even here pre-breakout 3 times. And we are not only breaking through it, but how are we breaking through it? We are breaking through it with a huge candlestick. It's not the largest that we are seeing on the screen. Probably this is a little bit bigger, but it's a very strong signal. And this is an extreme candlestick. Here we have a pre-breakout buildup. This is a pattern that I've made other videos about as well. So basically what it means is before a breakout, the market is really sticking to the level. And whereas previously the market was able to pull away from the level, now the market is really sticking to it and not able to move away at all, which is obviously a very strong bearish signal, especially in all of this context. And how would you place a target and a stop loss? Again, for targets, you would just look left and you would identify potential support areas, previous swing points. For stop loss, you would look for protection, and a stop loss is protected through technical tools. It could also be a moving average, for example, but in this case, we're using a trend line, we're using a previous low. You could also make sure that your stop loss is protected above the candlestick high. And this way is how you could identify and style and design a trading strategy. Of course, this is a very large breakout candle, and ideally you would like a breakout candle that is a little bit smaller, that is still breaking out of all of this support, but maybe not as strong, because as you can see in this case, you're forced to use a very large stop loss, but the idea would be still the same. And again, you can see the market is struggling at previous support and resistance levels. And that is why I said previously is that in the beginning, I would always recommend to keep your target a little bit smaller so that the price has an easier time to reach it. It will help you realize a higher win rate and therefore also help you trade with more confidence. So what is better than a pin bar? Two pin bars. And in technical analysis, we call this double pin bar a tweezer setup or a tweezer signal. So obviously, two pin bars then will look like a tweezer, and you have two pin bars here next to each other, long candlestick wicks, long candlestick shadows, very small bodies, and the body is located at the lower end of the candlestick. And again, the context is really key here. What are we looking at? We're looking at a very long uptrend that has been going on for a long time. We also see signs of deceleration, so the market is slowing down here. The candlesticks are not as strong as they've been previously. And now we have the context of deceleration with the pin bars and rejection. So we are looking at a lower time frame. Previously here, the higher time frame where you see the tweezers is the daily candlestick. And now we are looking at the 4-hour. This is how the two tweezers look on the lower time frame. We are able to identify a trend line. We are able to identify the previous low. For now, the market is still making higher highs and higher lows. Well, technically not higher highs, because you can see here the second tweezer, when we look back, is actually a little bit lower, and we can see that here on the lower time frame. So we are technically making lower highs, but still higher lows. And we don't want to go short here just yet, because as long as this structure of higher lows is holding, we are not technically in a downtrending market. So we really need to make sure that the market is pulling here through to the downside. And here you can see a little bit afterwards, you can see we have a series of red candles. The market is poking through it. This is a nice breakout signal. In this case, compared to the previous example of the pin bar breakout where you have this huge candlestick, here in this case you would be able to use a much smaller stop loss and get away with a tighter stop loss, which is ideal because it also means that you are technically able to get easier a higher reward to risk ratio. And you can see again we have the retest signal just a few candles afterwards. This is actually what sometimes happens after those long sequences. So if you have 1, 2, 3, 4, 5 red candlesticks in a row, the higher the amount of candlesticks in a single color, the higher the likelihood that you will actually see a little bit of a pullback. So if you see that the market is making 4, 5, 6 candlesticks in a row, it is recommended to be maybe a little bit cautious with trade entries into the direction of the candlesticks, because the higher the likelihood of a pullback is higher. Or it could also mean that you're just giving your stop loss a little bit more room to account for potential pullbacks. And this is just a little bit of a pattern and a little bit of a tip that you can use for your own trading. Especially breakout traders will need to make use of that, because sometimes you're trading into those long sequences. So now we have a very interesting case study, because now we're looking at a lot of confluence layers, and this is the type of trades that you want to look for. You want to be really patient and wait for something like this to align. So what do we have here? We have first, very obvious, an engulfing candle. The red candle is completely outside of the previous range. We also have the Fakie. The Fakie above the previous high. So during this uptrend, here was the previous high. Then the market tried to break out and was rejected. So we have the Fakie component and we have the tweezer, because you can see the last two candles both had those long candlestick wicks poking out. So we have tweezer, Fakie and engulfing candlestick. And the trade idea would be that we're looking for bearish opportunities. Another thing that is really going for it, or the signal has going for it, is the trending situation, because you can see the market was in a mature uptrend. 1, 2, 3, 4, 5, 6, 7 trend waves. And at 7 trend waves, it doesn't make too much sense to look for more longs, but if the context allows it, then and the confluence, it makes sense to look for reversals. And let's try and see what we can make out of this. We are, first of all, here on the 4-hour time frame, we are marking the previous highs, we are marking the previous lows. And as long as the market is trading inside of this, we shouldn't be doing anything. We're just waiting to see what is happening. Can we get more confluence factors? Is the market just pulling higher? In this case, we wouldn't be doing anything, but let's see. And you can see here we are trading into the previous support. Again, this is why you need to wait for a confirmed breakout, because now the market just confirmed that it's not breaking out through the lows. So in this case, you definitely don't want to be short. You also don't want to be long here, because you're still trading below the highs. So in this context, the only option and only viable thing that you should do is wait it out, because longs don't make sense, shorts don't make sense at all. And now it looks differently, because now you can see we have a breakout, and we have the breakout candle here. Probably this is accounting for a hanging man. Here we have a wick, and you can see the market is really breaking into the lows here. We are breaking out of the range and the market is moving into the lows. So now for the first time we have a lower low, and you can see technically this would be considered a lower high as well. So really having a lot of confluence now on our side. A few candles later, we can see that post breakout, the candle is giving you now an engulfing retest, whereas after the breakout, the market didn't go away fully into the trend direction. You can see the next candle tried to break into the range, but was rejected and closed here at the low of the candlestick, completely engulfing the previous candlestick. So even more context on our side. And then this has happened afterwards. The market moved into previous lows here, and all started with our nice context here at the top. Tweezer, engulfing, and Fakie, then a breakout, a retest with an engulfing candle. So there's not much more that you can look for in a trade, and it's very important that you can identify and know about all of those confluence and context tips. And I think this is a good place to wrap this up. I hope you enjoyed this candlestick price action guide. Let me know in the comments which is your favorite ones. Let me know also if you learned something new. Also, if you have any questions, always leave them in the comments. I will use those questions and I hope to address them in my future videos. So until the next time, happy trading.